Hi, my name is Josh Mahony, Chief Market Analyst at Scope Markets. Let's look ahead to a particularly busy week for the UK economy on a data perspective. And certainly, given the whole host of major readings coming out over the course of the week, this could really help set sentiment for the pound and the likes of the FTSE 100 and UK assets as a whole, as people really try to gauge exactly what the outlook is for action from the Bank of England. First and foremost, I just wanted to show you exactly what the big picture is in terms of expectations for these events and what the events are. Essentially, Tuesday, we've got the jobs report. Wednesday, we've got the inflation numbers coming out. On Friday, we've got retail sales. So, firstly, let's look at the jobs report. Expectation is that we're going to see an increase in unemployment. We're expecting to see an increase in average earnings and an increase in employment. So a mixed bag somewhat. I would say probably of the lot, the most important thing is wages. If we can drive down wages, is going to really give us greater confidence that the Bank of England will be able to cut rates by June. But this points towards a move in the opposite direction, instead a move up to 5.8%. So certainly anything below that should be welcome given those expectations, but that could be something that really does provide a reminder to the Bank of England that there's work to do. In terms of inflation rate, the expectation is a drop down to 3.1% on the headline reading and the core down to 4.3%. Look out for that monthly metric, 0.5%. We'll go into this in greater detail in a second. Then Friday, we've got retail sales. Generally, retail sales can be relatively volatile, so I wouldn't necessarily read into them too much, but certainly it is a good barometer of consumer spending and consumption within the UK economy at this point in time, or for March. Okay, so let's look into headline inflation here in the UK. First and foremost, 3.4%. As we saw previously, the expectation here is a drop down to 3.1%. So a welcome decline, but still some way away from that 2% target. But there's plenty to look into here, and that's highlighted by a couple of parts on this chart. First and foremost, if we look at what's dropping out this time around, the March 2023 figure is 0.765. So a pretty hefty reading. And if we look at the monthly expectation this time around, it was 0.5%, right? So that's where we get the decline. If we get that 0.5% to be lower, then we'll see a greater decline in terms of the year-on-year reading. But will that happen? And certainly the fact that we've been seeing upside in terms of energy prices of late does really raise the risk of stronger monthly readings, which is exactly what we saw over in the US for the week just gone. So let's say we get in at 0.5. If we're looking in terms of what happens beyond that, well, we can see the April figure is much higher than that 0.765. So we're expecting to see greater disinflation for the month ahead. So not necessarily this time around, we are expecting disinflation, but in April, we're expecting to see, when the April figure stripped out, greater disinflation then. And if you look at the 10-month annualized, which essentially means once we have 2 months more data, where will we stand? The projection is 1.68, which essentially means if we see 2 months of sort of average readings, average for the last 10 months, come out in the next 2 months, we could see inflation back below that 2% target. The caveat there, of course, is the fact that, well, recently we have seen inflation picking up, certainly last month, and the whole question marks around energy continue to be posed. So it will be very important to note that, but there is a pathway that could see us in 2 months' time providing a inflation gauge well below that 2% target. Remains to be seen, but that certainly does form the basis of potential weakness for the pound. In terms of core inflation, we can see here that the March reading is 0.85. Again, pretty solid figure that's going to be dropping out. So there is a good chance of disinflation coming into play. The 9-month annualized reading, which essentially means strip out the next 3 figures, where will we be? That's below 2%. So it's going to take a little bit longer to get that core reading down. Also, it depends on what we're going to actually see and whether we see elevated figures. But certainly the March figure from last year, the April, the May, all of them pretty solid readings. So if we can see some relatively muted monthly figures coming out in terms of core inflation, that could really set the basis for us to be able to get back below target within 3 months. And really, this does set the groundwork for that June rate cut. But will we see it come to the fore? Certainly, the monthly readings are going to be absolutely key here. If we start seeing monthly readings back in the realms of 0.1, 0.2, 0.3, then we're in healthy shape. But last month, we saw greater than expected readings on both the core and the headline monthly figures, which set us back a little bit. But there still is a pathway back down to 2% if we see somewhat average readings for the last 9 months replicated over the next 3 months. Then we're back below 2% for core CPI in the UK. So there's plenty to play for here, and there's plenty grounds for optimism for those hoping to see that rate cut in June. But this really is going to be a key release within that. And certainly if we see strong numbers on both headline and core, it's going to set back those expectations and temper those expectations for a June rate cut. In terms of the retail sales element, one thing I wanted to point out here is this big divergence we've seen over recent years between how much people are willing to spend in terms of value, which does continue to increase. As we all know, we're spending more than ever because of that inflationary boom, and how much we're actually getting for that money. I would say that what we have seen recently, we've seen some jitters, but I would say this has somewhat flatlined. So keep an eye out for this chart when you drill down into the retail sales report for the UK. Where are we going in terms of the volume and the value, rather than just tracking that top level number, which is the value? Also understand exactly what people are getting for their money. And I think there's a good chance that people reach a limit in terms of how much they're willing to spend for receiving less, essentially. So certainly a key part of that retail sales report worth watching out for. So in terms of some markets to watch out for here, let's just go full screen here and show you the FTSE 100. Daily time frame shows you that we've been largely consolidating here following this rally up into this area of resistance. I'm going to take it onto the weekly time frame in actual fact. So we saw this chop taking place over sort of the middle to back end of 2023. Then we saw this breakout finally happening in March, rallying back up towards this area of resistance that we saw these prior peaks up here. So you've got essentially 79.36, 80.47, right? So we rallied up into it, a couple of long upper shadows, started to see some weakness. Coming off the back of that big rally, I think there's a good chance that we do see some of this strength coming off. And certainly if we see that inflation gauge coming in relatively strong on a monthly basis and people sort of temper their expectations for a June cut, we could see this pull back somewhat over the near term. Here's the daily time frame though, and you can see within the daily time frame exactly the sort of formation of this recent rally. You can see exactly these sort of mid to deep pullbacks. That's probably a 61.8. Let me just grab it and put it on my deep retracement zones. So that is that's a 76.4. Well, somewhere in between the two. So we've got that deep retracement, another deep retracement there, then a mid-sized retracement. That looks like a 50% to me. So it's like the deep retracements often happen when there's big indecision. The medium-sized retracements, they happen when you're gathering a bit of momentum. And when people become very confident in a move and a trajectory, you start seeing very shallow retracements, 23.6, the 38.2. And so what we're seeing at the moment, we're seeing consolidation. Are we going to post that? Essentially, that's all it is. Let's see, is that a 23.6? No, it's a 38.2. So at the moment, holding on to the bottom end of this shallow retracement zone. If we break back below that level, like I said, if inflation and wages come out strong, then you're looking for a pullback into this sort of 7,800 kind of area. I can get the deeper. There we go. Let's get the deep ones on this as well. Double up with the fibs. And there's, so you can look here, that's 78.20, 77.74. That looks like a good area if we did get into it for that retracement play for a rally once again. Might not necessarily happen. And certainly I hope we see a low inflation gauge to embolden us for a rate cut in June. I think everyone would hope for that rate cut to come to fruition and an end to these sky high interest rates in the UK. But certainly this area of sort of consolidation holds for the time being. The 38.2 support holds, and we're starting to strengthen once again. Keep an eye out for, of course, wage and inflation data in particular. Then I want to look at the picture for the currency. So the pound, where do things stack up? Well, this is my sort of overview against many of the other major currencies, and it sort of gives me a good idea of exactly where I want to trade and where the different trends are for any currency that I'm looking at. Something that I've provided within the weekly outlook is the pound against the Swiss franc. And as you can see here, that's probably the most clear-cut trend that you can see within any of these. Sterling yen, also interesting, but there's a possibility of intervention from the BOJ that they have warned about given the devaluation of the yen recently. So I'm going to leave that one alone. Instead, I'm going to look at good old cable. And that's because what we've got here is a potential topping pattern, but we haven't necessarily broken it. So we're at a key level that could either see us reverse or see us break down through it. So you can see here, we've got this zone of support, 125, 125.2, essentially. We've dropped down into that support level and seen that sharp decline coming into play around that US inflation gauge, and seeing that big risk off move with the dollar strengthening off the back of that. So are we going to break through this level or not? Well, certainly if we see a weak inflation reading coming out and emboldening people that we're going to see that June rate cut, that could give us the potential downside move for the pound coming into play alongside that sort of risk off move in the markets. But certainly I would say this is going to be a really interesting one in terms of sort of price action. At the moment, we're seeing some chops. So you're seeing that sort of shallow retracement breakdown. Could this be another retracement before we break down once again? Or are we going to break up through this 1258 level to point towards a wider rally here for cable? Certainly, it's an interesting one. I would say always trading against the US dollar is an interesting one because you have that sort of risk on, risk off element really embedded into the currency pair. But I think this is a key market to be looking up for at the moment, as you see a potential double top formation, but that would only come with a breakdown through 125. And until that happens, there is, of course, that risk that we do see some sort of near-term rebound with a possible strengthening of the pound on stronger UK inflation numbers coming out midweek. So plenty to sink our teeth into. I hope this has been useful, covering the likes of the pound and the FTSE 100. It's going to be a busy week, most notably for inflation and most notably for the UK market. So keep an eye out for that. If you've enjoyed this, then subscribe and hit that like button, and we'll be coming back with more content in the very near future.